Good day, folks. This is your overall general summary of the British Columbia real estate housing market for October of 2025. Basically, the market is relatively balanced. You've got different areas or pockets that, like the Lower Mainland, is not doing as well as the interior, but the Lower Mainland is starting to see signs of a recovery. The interior is sort of led by Kamloops. We deal with the southern interior of British Columbia. The market is looks like it's going to go into recovery. We've seen some increase in absorption rates in the last few months, and definitely all areas, including the Lower Mainland, had a little bump in October compared to September. And so the significant thing about that is that it's supposed to be going down this time of year. Instead, it's got a little bump. And if we see another little bump in November and maybe December, December is kind of an odd month because you've got Christmas there and people just back off. So what's driving this? Why is this happening? Why is this? We don't have like a booming market, and it's not going to boom in 2026. But we see just the inklings of a recovery coming in. Why is that? Well, the number one thing is interest rates. When you think about when COVID happened and they thought the market was going to crash, they dropped that overnight lending rate all the way down to 0.25%. And of course, the market exploded. It was the biggest boom we ever saw. And then they had to figure out a way to slow it down because inflation was just through the roof. There was inflation went as high as 8.1%, I believe the figure is. So what did they do? They raised interest rates. They raised that Bank of Canada overnight lending rate all the way up to 5%, which basically put the brakes on in the market right across the country. So they have been inching down that interest rate, and you can see that it's having its effect on the market. That each time they bring that rate down 0.25 point, there's another sliver of buyers that could not buy last month that can now qualify to buy. Or there's another sliver of buyers that could buy last month at this price, but can now buy something a little bit more expensive. And that's the major push in that marketplace. So they've been inching that rate down. And it's now that overnight lending rate, the last announcement it was 2.25%. The next announcement is December 10th. So where does that rate come from? The Bank of Canada bases it on a lot of things, but one of them is inflation. And the last inflation announcement was 2.1%. So you think about what the Bank of Canada wants to do. They want to keep that inflation rate hovering around that 2%. But there's also this thing called core inflation. Core inflation takes some of the anomalies out, like the cost of fuel and the cost of food, and sort of stabilizes the rate. And that core inflation is higher than that 2.1%. So I actually don't think, I hope they do, because that helps my business, but I don't think they're actually going to bring that rate down on December 10th when it's announced again. They're going to look at the market as, okay, we've stabilized this market. We don't want it to start shooting up again. And so we're just going to keep it stable. But, I'm wrong a lot of the times when I try to anticipate interest rates. It's much more difficult to anticipate interest rates than it is to watch the statistics of the market. So the overall British Columbia market is relatively balanced. There's some areas that are less that in the lower part of that range than other areas are. And I think you're going to see a very, very slight increase in the market as we go into 2026. It's going to be a pretty decent year, but it's not going to be anywhere near a boom economy or a boom real estate market in British Columbia in 2026. So that's your housing market review, overall general review for British Columbia for October of 2026. October of 2025.